It's July 2022, and Coinbase just filed a petition with the SEC to outline concrete rules that would identify which cryptocurrencies are securities and how security laws would apply to them. And then they waited, hearing nothing. And over a year later, in November 2022, FTX, one of the largest crypto exchanges in the world, collapsed, sending shockwaves through the crypto world and, of course, through Washington, D.C.
FTX. Biggest story in global finance right now.
FTX is a global cryptocurrency exchange.
Is this the Lehman moment?
This led to a growing number of government officials, the same officials that took millions of dollars in donations from Sam Bankman-Fried, urging for increased regulation in the crypto industry. But yet, almost 2 years after their initial petition, Coinbase has yet to hear back from the SEC. Something is coming. The government has made it clear that they're going to set crypto policy through litigation instead of rulemaking. And all of that spells bad news for Coinbase and perhaps the future of crypto in the US. But as per usual, perhaps there's more to the story, because Coinbase just decided to sue the United States government. If you invested in Coinbase stock 5 years ago to the day, as of this recording, you would have lost over 80% of your investment. Now, this isn't that shocking. Crypto is volatile, but over the same period of time, Bitcoin is up almost 200%. So what exactly is going on? Well, young companies always have struggles. They always have growing pains, especially in an industry such as crypto that is so new. But if there's one thing that investors around the world hate, it's government crackdowns. And it looks like that is what's going to happen with Coinbase. You see, back in March, Coinbase received what's called a Wells notice from the SEC. A Wells notice is a formal warning that enforcement action against them should be expected. It's the government saying, we are coming for you, but we're not going to say when, how, or what we're going to come and get you for. But long before this, Coinbase has been incredibly proactive. They have met with SEC officials over 30 times in the last year with just one goal in mind: carve out a path for digital assets to be registered by the SEC. Coinbase hasn't turned away from regulation though. In fact, they've basically encouraged it, rather than operating in a gray zone, in a regulatory environment where the government could come at them from any possible angle. They want to know where the lines are drawn so they can operate cleanly within them. It's more than reasonable, but the SEC hasn't budged, hasn't given them any guidance or any outline on when, if, or what kind of regulations they'll implement. And all of this leaves the entire industry exposed to regulatory actions. But it looks like Coinbase has finally had enough of sitting on the sidelines, of waiting to figure out how to play defense, of figuring out what angle the government will come to them at. Coinbase is now so fed up that they are suing the US government. More specifically, they've decided to file a lawsuit against the SEC. Coinbase has asked a federal judge to force the SEC to finally give Coinbase an answer on its July 2022 petition, which asks if security laws could be applied to the crypto industry. And that's all they want to know. They just want to know if already existing securities laws that apply to securities such as stocks will apply to crypto. And if they do, then they can make the necessary adjustments. Now, if there are increased regulations, and most certainly there will be, it does make the picture clearer for Coinbase, but it will create a whole new host of problems for them. Crypto begins to be regulated the same as other securities are. They're going to have to do a couple of things. One, there's going to be much higher compliance costs, and they'll be much more susceptible to potential fines or legal action. And number two, they may even be forced to delist certain assets from their exchange and restrict trading to accredited investors only. This is terrible news for Coinbase shareholders who have fled from the stock, tanking it 25% in the last 6 months, over 50% in the last year, and over 80% in the last 5 years. But it turns out it's not only Coinbase shareholders that are growing increasingly fed up with the situation. Brian Armstrong, Coinbase's CEO, just said that they are willing to leave the US, putting the jobs of over 4,500 employees at risk. And if that happens, what's the future of crypto in the US? On March 27, 2023, US Senator Elizabeth Warren launches her re-election campaign for a third term, with one particular campaign message catching the eyes of many. building an anti-crypto army. That's right, just when you think that things can't get any more idiotic, when priorities can't get any further out of line, when there's not one more politician out there that couldn't pass a basic grade 8 economics class, you're hit with this. Work on the growing homelessness problem? No. Bring down inflation? No. Work on the disgustingly high national debt and bring it down? Of course not. Instead, we're going to build an anti-crypto army. This represents and reflects a growing concern that there is going to be regulation in the crypto industry that goes beyond a healthy dose of regulation that is needed. After all, the Fed now is set to be released this summer, which sets the path for the launch of a CBDC, a central bank digital currency, which, well, I will let you form your own opinion on. But it's not just Elizabeth Warren. If she were an outlier, it wouldn't be a big deal. But when you look at the larger picture, you can really start to get a sense of the vibe of what government officials are saying and thinking about crypto, and it's not great. Let's take a look at the ongoing banking crisis. On March 10th, 2023, Silicon Valley Bank collapsed, marking the second largest bank failure in US history. Not long after, Silvergate and Signature Bank would also collapse, creating growing fears that the entire US financial system is at risk of collapse. What happened here? Well, I'm going to explain it to you very simply. When COVID hit, the government printed trillions of dollars to prop up the economy. Much of that money went into US banks. Now, of course, like any basic economics teacher would tell you, this created a tremendous risk of the rate of inflation increasing. But the government, including Jerome Powell and the Federal Reserve, promised the American public that inflation would not rise and that they wouldn't increase interest rates.
That under any circumstances, we're gonna keep our inflation target at 2%, and we're gonna use our tools to get inflation back to 2%.
And what happened? We all know exactly what happened. Record high inflation, levels we haven't seen in the last 40 years, and the fastest interest rate increase we've seen in history. Yep. Folks, the US government lied to you. Shocker. But the problem here is that the banks trusted what they said, and as a result, because banks need to make safe investments, they dumped all of their excess cash into US treasuries, which have now plummeted in value. I made an entire video on this topic that you can check out if you want to dive in deeper, but I gave you a quick outline here just so you can fully understand how idiotic what I'm about to tell you is. Gary Gensler, the president of the SEC, literally just blamed the ongoing banking crisis on crypto. Yup, on crypto. How does that make any sense whatsoever? It doesn't. And of course, it is just one more example of a government official creating a narrative that works for them. Need further evidence? Take a look at this clip from 2018, where he said that 3/4 of the market is not particularly relevant as a legal matter.
So we already know in the US and in many other jurisdictions that 3/4 of the market are not ICOs or not what would be called securities, even in the US, Canada, and Taiwan, the three jurisdictions that follow something similar to the Howey test that we've talked about. 3/4 of the market is non-securities. It's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings and what's a security and what's not a security. Relevant and important debate. But for 3/4 of the market, it's not particularly relevant as a legal matter, as a regulatory matter. Brodish.
I've shown you all of this to paint a picture of what the ongoing vibe is from government officials surrounding crypto. The thing is, though, they can't control Bitcoin. It's decentralized, but they also can't afford to lose their control. And as a result, one of the most successful investors of all time just put out a warning saying that crypto is dead in America.
Crypto's dead in America. I mean, now you had Gensler. You had Gensler even blaming the banking crisis on crypto. So the United States authorities have firmly pointed their guns at crypto.
That's Chamath Palihapitiya, an ultra-successful venture capitalist worth over $1 billion. Chamath is a longtime Bitcoin bull, first buying Bitcoin back in 2010 when it was just $80 a coin. I love learning from ultra-successful entrepreneurs and investors, and the more I dive into a Bitcoin, the more difficult it is to avoid Chamath. He's been an incredibly bullish spokesperson for Bitcoin, saying that Bitcoin will hit $100,000 in the next few years, and that it will hit $1 million a coin within the next 20. So declaring that Bitcoin is dead in America is a bit worrisome, and I wanted to know, how does this change his overall thesis? Does it change it? At the very least, how does it impact his thoughts on Bitcoin? While Chamath didn't expand on his comments in this podcast episode, it's a clear sign that regulation is coming in the near future and that crypto and Bitcoin might be facing multiple legal battles somewhat soon. But what makes this so interesting is that Bitcoin is decentralized. What can the government actually do? And that raises a very important question. It's clear that the on and off ramps are tightening, but even if there was some kind of Bitcoin confiscation like we saw in the Executive Order 6102 signed in 1933 by President Roosevelt, where the government confiscated everyone's gold, I find it hard to believe that Americans are going to line up with their crypto wallets and just hand them in to the US government. Chamath correctly pointed out that Coinbase has been doing everything right. They've been regulation friendly. They've been proactive in trying to get clarification on the matter. Chamath said, Coinbase played by the rules, stood in line, tried to do the right thing. It seems that every step along the way, everything from board composition to executive composition to how they try to interact with the regulators, yet they were probably the furthest away from getting a license. He said the one that came the closest was the one that was the most fraudulent, which is FTX. How is that even possible? And that is what I will leave you with. If you trust the media and you trust the government, don't do a single thing. But if you don't, check out this video here where I dive deep into Balaji Srinivasan. He is one of the smartest guys around, and he recently bet $1 million of his own money that Bitcoin is going to hit $1 million in the next 90 days. It's a must watch. Thank you guys for watching. I'll see you in the next one. Play the long game. Peace.